Welcome everyone to the DMR session here for the 16th of November, 2021. Hope everybody's doing great. We had some nice moves in the market last night for sure. This was the one that I was in. And I do apologize ahead of time for not including a very, very subtle zone flip that I noticed after I was considering taking this trade. This is GU from last night. And one of the reasons that I like GU, let me pull up the daily trade organizer, was this D1 trend condition, right? We were sitting at this very broad, high volume area that had volume both directions, so that wasn't giving us directional bias. We were anchoring off of a H1 zone flip above. There was an H1 zone flip above, and we did have the outside structure towards the short side. 5200 was to the long side, but we were in range condition, and I really favored this D1 trend condition. Let me show you this. Very subtle, extremely subtle, little tiny zone flip back here that anchored this reversal. So what I've done here is I've put it on a 15-minute chart and squished it down with the zoom real tight, but there it is right back here. You can see that it was back on Thursday of last week, and this was a tea time line in there. So it was at a high volume time in tea time. That was a zone flip that anchored this setup last night, which I'm sure I wasn't alone in. Market makers did plenty of loitering up here, and this is partially what we're going to get into tonight when it comes to our part two of the psychology of being awake, really awake, and understanding the false move appearing real and staying committed to the downside. Even though this stuff is banging around and looking long, I mean, put it on the edge of the chart, everything about that tells the chimps in the gallery that price is going to rise, right? So we're on the other side of that. And it does take some practice, it takes some stamina, but you're doing the opposite of what the prevailing expectations are. Where you stand in your foundation will show if you can handle that or not. And then, of course, it tapered down very nicely. The M1 chart was where I entered, and it was off this move right here. This was a serious high bar type of affair. You can look inside that candle. You can see the squish down inside there. If you were watching futures markets, I wasn't. But if you were, that most likely would be a serious high volume absorption, meaning that anybody who was willing to sell their shares, these guys basically sold it from them. So anybody who was willing to buy, they sold hard. So anyway, the dealer was on the short side right here after that bar. So based on all of my years of high-low drill training, everything about me was screaming short right here. And yeah, I should have waited until the confirmation of the M5 chart rolled over, but none such will not happen. The reason being is that when you do get an order on this high up and you run your stop loss to break even, pretty much you're good for the run. And of course, this ran further. I took the picture after I jumped out of it, but you can see it hit the water and the top edge of Asia range. That was about 3 to 1. My TP was just a little below there at 3.3 to 1. So a 3.3 to 1 trade is nice. If you were trailing this on the Fibbo trailing technique that I've shown you, this pin up here went to almost 50 fib, but you'll see that it closed at the 382. So 382 trailing this particular short last night was just the medicine to have on hand. And you can see each one of these pullbacks, that was a 382. The way it closed on the 5-minute, the way this closed was at the 382. And then you had another 382 and down she goes. It was an amazing trade. It was fantastic. It's what I like to trade these days. Some type of zone flip, anchor point, in line with D1 trend. I like to see at least 3 issuances of inducements. Those are all obviously false inducements. And then, of course, you see the vector move. But this little subtle zone flip right here, keep an eye on these. I do apologize for not digging into this in the pre-market, but I can't do everything for you. So wow, it was beautiful. This was actually what solidified my entry on the M1, to believe it or not. So the 5-minute obviously gave a perfect entry, and down she went. So 3.3 to 1 on that set. So some of you were saying you took the GJ. Okay, let's go have a look at that. I didn't include any GJ here today. If you notice, the GJ stalled. And where we had GJ, unfortunately, I couldn't update the daily trade organizer. GJ was, in fact, D1 trend, but then it turned away from D1 trend once price got above the 50 EMA on the H1 chart. Let me show you that. This is why I filtered out. This is why I did not take the GJ. So I want to teach you that. It's very important for you to be able to filter down pairs It's going to make your life a whole lot easier, but it's not something that comes naturally. It's something that comes with experience, and anything I can do to front load that experience for you, I will. But I was looking at GJ. I actually got into it short and scratched out at break even. I didn't like the way that it looked, and I discovered as I was observing it that it was actually no longer in D1 short trend condition, whereas GU was in D1 short trend condition, and GU was the one that moved. So allow my chart to flip over to GJ. I'll show that to you so you can have a look at that, Mapala. Good to see you, my buddy. How are things in Africa? It must be dark there right now. I imagine it must be in the middle of the night down there. But it's nice to see everybody from all over the planet. Boy, we've got them from every continent in here, which is always a pleasure to see. Yeah, you're dealing with. There's GJ just fired up, but he's down here somewhere. There he is, Mapalo. I almost spelled your name there. I think you're in South Africa or one of these nations. It's 2 a.m. there, dude. You should be sleeping. Anyway, don't want to knock you. It's a pleasure to see you. Okay, so GJ, see how it went above the 50 EMA? That's all you need to know. Once it cruised above, so I'm sitting here stocking this, what appeared to be a lovely type 1 London pattern. I mean, it did play out for some. If you held it to the 50 and then got off of it, also it trapped through the top edge of Asia range. Good on you. You were able to scratch out. I scratched out in this mess after I discovered, man, what am I doing? I've got this price is now above the 50 EMA. So remember our rules. When price is below that 50 EMA and the 8 EMA is pointed downward, that's a D1 downtrend. Right? If price is above that 50, it could be considered a long trend, but there's nothing trendy about this chart right here. So really that was it. I used a macro consideration to cut out of this. Again, the 5-minute, it did work out, but I got out of break even inside here and then started to work the GU, which was a lot more fruitful. But you can see it really didn't deliver. It bounced off the 50, but it was, it was decent. M1, of course, is always tradable. Even in the trades that fail on the 5-minute, usually you can get a 2-to-1 off of this. So I would imagine if you hit this thing from the 1-minute standpoint, you would have been able to muster out almost a 2-to-1 on this with a stop loss above the high of the day. But remember, 50s and 00s. Remember the 50s and 00s thing. Just remember Mario, right? The Mario Super Bowl price is constantly banging around between 50s and zeros. That was your 50 bounce, and on up she went. Okay, so a little bit of inside stuff there. I do want to give you guys that type of insight. Again, we had this GJ as D1 short trend, but you have to use your own reason. As soon as price induced beyond that 50 EMA, this was gone. And let me show you one other trick while I'm here. This is what I did this as well. There it is. I put it on there. So I wanted to attach, I tried to figure out, okay, what is the 50 EMA from the daily chart down on the 15? And so I put this EMA on there. It's a 4,800, and it's only going to work if you have a sufficient amount of chart history. If you open a fresh demo with a broker, they're not going to give you all that much M15 chart history. You really need to have, I don't know what the exact amount is, but I'm guessing at least 8 to 9 months of chart data to have a 4,800 EMA paint properly on your chart. But again, look at the trap. It's above the D1 trend. So again, I reverted to a macro consideration, meaning a higher time frame consideration, cut out of GJ and went over to GU and just had to weather all those false moves that appeared real, which is what we practice to do, right, guys? I mean, that's what we do. If you're in early on any trade, it's going to be painful, but I suggest early is good. Early allows you to grab what would be considered a high of the day or low of the day entry that when you run your stop loss to break even, you're in a walk away condition, meaning you can flip to your smartphone and you don't have to worry about price pulling back and knocking you out at break even that much. You do have to worry about it. So what I typically do, let me show you how I handled GU last night. I think that's all very important information here. The way that I handled it, you had the trap that went up. All right, we had three. If you notice the GJ, it did give these 3 moves, and then it finally started trapping inside here, and then it gave us that little entry that I got. So I took my entry here, and it started running down. And as it was running down, yes, I wanted to take my stop loss and draw that thing to break even, right? I wanted it to be here, but my chart vision was telling me that price might actually come up to there and bounce down. A lot of times you do a stop loss to break even when you enter on the fringes, dealers will come up, knock you out, and then down she goes. So I wanted to avoid that. And what I did is I didn't do a stop loss to break even. What I did is I did a stop loss minus 2 or 3 pips. Steve talks about this when you're taking your stop loss that used to be out in the high of the day and bringing it into price. I decided I was going to take it just a little bit beyond my entry. All right, so my entry would have been right in this area here. And so my stop loss was just a touch outside. And what this did, which was really cool, which is, again, why I love the advantage of getting in at the high of the day. Let's draw our fibs, right? So we have what ended up being the turn right here. There was always a turn in the market. Whoopsie, want to keep that yellow. So what ended up happening here was price did its vector move down, and then it started to bleed higher, right? Started to bleed higher. And what I noticed about my stop loss position, which was very, very comfortable, was that my stop loss, let's just draw in the fibs. Okay, so here's our 50, all right? Let's make them tiny like we usually do it. So there's our 50, and here's our 382 pullback, and then we have our 618 pullback. By me placing the stop just a little bit above my entry, it was beyond the 618. So when you're studying the way the dealers work the market after they've created a high of the day and they start to shift, you notice a lot of times they come back and hit that 618. So my stop was outside of the way sufficient that even if they did come back and hit that 618, I wasn't going to be taken out. I'd be able to take the ride down. So these are all the thoughts and considerations you have as you're in a trade. The other thing I did, which I think is something that you'll want to be very aware of for those that like to click out of your trades early. As you know, I do a lot of chart flashcard therapy, I call it. It's almost like I just run these flashcard sequences with my favorite songs playing. And really all it is it's just a metric ton of M5 entries that are EN to TP. EN to TP. That's not the right one, but you get the idea. This one's just EN to TP. I've got hundreds and hundreds of, I think I'm up to 350 sets at this point in the market since the beginning of the year. So what I do is I run these constantly. ENTP. I want to see 5-minute type 1 London patterns on the edge working out, and I have a ton of them, and you should too. So I'm up to 706. Wow. So 353. And so what you have is you have in your mind that relationship of things working out, right? So I like to play music when I watch these. Well, one of the best things you can do when you are in a trade and you're past entry and you're now working on your trending, I like to play the tunes that are accompanying these EN to TP videos. And I know that sounds a little weird, but I like to put music on once I'm in profit. It helps take the brain away from the paranoid thoughts of, oh my God, it's going to pull back. And what it tends to do, because I watch these videos all the time, when this thing pulls back, I don't click out. And for whatever reason it is, it changes the brain rates. It does what it does. Music has a tendency to slightly change how we look at things. And of course, the GU did pull back, but then it just shot right down and then went to the 3.3 to 1, which was the ideal take profit. Okay, so think about that. Play some tunes. And again, I like to put the tunes on after I'm in the profit side of the trade. I don't like them when I'm in this mess, because a lot of us have been there, where the price goes one leg higher, stops you out. Do you get back in again? All these types of things. I don't like the music there. I like the music after we're starting our run. All right, so really important stuff. Yeah, music soothes the beast, Graham says. It does. They also found, I know I'm going to go in the deep end of the pool here, but I love studying anything related to the mind. There's an author named Robert Duncan, and he attests that he used to work for the U.S. government in what was called the Voice of God technology. And they would actually clone someone's brain and be able to retransmit ideas back into them. And he basically says there's no way you could protect against this stuff. He said one thing that helped was music. So I think that stuck, and it was from one of his books. It reads almost like sci-fi, but if you study MKUltra and all these things, and if you go back to the Salpêtrière Clinic in Paris, France, and you get an idea of what really goes on with the remainder of our super consciousness, you understand that we've had 134 years of serious manipulation. So it's not out of the question that stuff can be true that Robert Duncan talks about. But it's a fascinating read. I think his book is called Soul Catcher by Robert Duncan. Pretty intense stuff. But he was talking about magnetic nanoparticles like 4 years ago as being used. So anyway, that opens up a whole different discussion. We'll avoid that one for now, but you get what I'm talking about. So let's put you on the edge here. And we'll leave Robert Duncan aside and his amazing work, which is fun to read, and turn our music off, and we'll ask you to study this chart and what do you see here, and what are your plans for any type of activity going on right here on GU. This is November 12th. So let's get an exact day for when this was. This is last week. I always use last week to drill with you guys. Right? So this would have been, the 12th was on Friday. So many of you might have actually experienced this trade firsthand. And so we're going to teach you some stuff here tonight that's going to be very useful. And I want to flesh out what you see on the chart. And again, we've added our pinched in or narrowed in TDI extreme lines that seem to work well on the 5-minute chart to show shark fin alerts, which are real nice. Changes color. These are now in the WSM viewer. Got another one loaded up just above the screen here for you. You can see the nice shiny red first leg shark fins. So we've got those going, which is nice to have in these optional charts. That tells you that you have a possible first leg. So everything about this looks like a type 1 short, right? EMA's fanned out. Okay. So a lot of good stuff on this chart, right? Wait till I show you the second one. This is only the first one. I'll show you the second one. You'd be just like, oh, man. How could you not take that, right? Well, what else do you need to know before you get mini stack threes? I mean, this thing is loaded up. What else would you like to know about this particular chart to authenticate a trade short? Right? Everything's looking short. Type 1 London pattern short. Everyone's seeing it. Yeah, the higher time frame, Aaron. That's exactly right. So let's show it to you. Here's your D1. What do you see on that? And this is at the exact moment, right? The WSM viewer allows you to carve it right to 3:15 a.m., which is where that 5-minute chart was parked as well. So go ahead and chime in to me what you see on this one. And that one's a pretty easy, straight up kind of thing, right? You can see it's a D1 downtrend. Pretty clear. Prices below the 50 EMA, 8 EMA is headed south. All right. Well, let's show you the H1 chart here on Friday and see how you feel about this short that you might be trading here. Let me ask you all about that. So again, we're on the H1 chart full screen, and we are at that same time, 3:15 a.m. Eastern Standard Time. We're assessing this trade. Okay, so it's the same exact point, but now we're on the H1 chart. And so are you still thinking short on this one? Nice, Aaron. Nice, Mapalo. Everyone's all right. So this is good. This is now where Jim is able to basically see if you guys are catching on to some of this stuff. All right. Yeah. Okay. Good. Boy, I'm glad I did it this way. I've got a second one here. This isn't the only one. I love this kind of thing. Because we're so excited to trade. We've all showing each other our trades, and oh man, you're supposed to trade. Well, yeah, it's a type 1 London pattern, absolutely, without doubt. I think it's absolutely perfect from the standpoint of a type 1 London pattern. Remember, we have a couple variations, but one of the variations is closing above the EMAs, tapping the EMA, closing above the EMA. There's your inverted hammer on the second leg, and then closing below the EMA, right? Close above, tap below, close above, right? We have these designations. We talk about this, at least I talk about this in the deep dive series. Right, so here's our cheat sheet that will illustrate this. Full 13 EMAs when that price crosses the 13 EMA on both sides. We're using the 9 EMA on the M5 chart, by the way. A type 1B is when we get that tap in that center leg. And a type 1C is when the center leg does not even touch the EMAs. In this case, the center leg went right through it and came back up. So everything's screaming short here. Okay, this is what you train yourself to see. Now, here's what we're talking about with a caveat to this. Now, I run these on a regular basis. I like to throw in whatever my favorite 2 or 3 tunes are. Keep the videos at about 11 minutes long. And I just watch EN to TP of this particular signature trade. Now, there's a trade-off here. There's a way that you can go too far with this. Okay, so that's what I'm alluding to here. You can basically grab anything that moves. What do they call that? Beer bottle eyes or whatnot. I forget what they call that. There's probably an Aussie in here that could fill in the blank there. But it's when, you're so drunk that she looks great, but she's actually he, and you know how that ends. Anyway, you're boozed up by this prospect of all these things working out. And there is a catch to all of this. So we're watching this type 1 London pattern play out, and she's dropping. Oh, ouch, pulling back. Ah, man, it stopped me up. Wow. Damn. So why? Why, I ask. Perfect type 1 London pattern. It just ran right up and stopped me out. What's going on with this? What was your filter that kept you from taking this type 1 London pattern M5 short setup? Well, I've seen a lot of you type it in quite astutely early on, especially those that are often participating strongly in here. Aaron, Mapalo. See if anybody else. Yeah, Al, you looked for the higher time frame. I'm not sure if you saw this. So yeah, let's talk about it. So we're in this business where money is just on the trees, man. You know, it's there. It's there. It's ripe. It's a $5.5 trillion a day market, including all of the derivatives, of course, of Forex. And it's a $2-something spot market, $2.6 trillion spot market. So there's a lot of money on the table. You should be really excited about it. But that has its limitations, right? Everything that moves looks like it's, you know what I'm talking about. So that's when we bring up the algo. And the algo is the most important thing that I can guide any student into, because really we can show you the principles and we can get you a certain way of your journey, but the rest of the journey is going to be between you and algo. All right. So what is algo? Algo is looking back. Algo is the very first thing you do is you would go through all of these type 1 London patterns on the M5 that all of them, too good to be ignored. So you would basically look at every single M5 type 1 London pattern and grab it. You would grab this one. You would take a picture of it on the edge. And of course, after it got stopped out, and you'd fill folders up full of losses and wins. Okay. So it looks, what is it? Anything that can move. Basically, you're ignoring the higher time frame and you're just going back and filling your folders full of M5 type 1 London patterns. Wins and losses. You're filling them up. And then you start to examine the commonalities of the losses. In this particular trade, when I showed that H1 chart, for some of you, you instantly typed in, nope, not taking it. I'm not taking that short. Nope, because of what the H1 chart showed you. There was something on the H1 chart that would have steered you very far clear of this right here. Oh, man, she's a man. Stay away. You can use any metaphor, of course, just being humorous, but you get my point. We get really excited about this business, and that becomes a hindrance in some senses. I want you to be able to take that excitement and funnel it into going back in time, extracting out wins and losses, and then looking into these commonalities, right? And let's examine a great quote from Napoleon Hill for thought for the day. Many successful people have found opportunities in failure and adversity that they could not recognize in more favorable circumstances. This is true of trading every time you take a stop out. You need to have this type of tenacity that goes back and says, why? What was it? What could I have seen? Was there a commonality that shows up in a lot of the losses of this particular trade in this particular pair? Well, most likely, yes. So my main, they'll read the rest because it's always great stuff. Samuel Johnson once observed that the prospect of being hanged wonderfully focuses the mind. Oh, so true. You yourself may have found that your mind seems sharpest when you are faced with the greatest difficulties. Desperation often proves you really are better than you think. But with the exception of an immediate threat to your life or health, there are a few situations that require instantaneous, fast-thinking, agitated action. When the world seems to be conspiring against you and nothing is working out right, pause for a few moments to think the situation through. Yeah, slow it down. Then develop the most appropriate plan of action, the one that has the greatest likelihood of success. Go back into the planning stage. Go back into your algo, chimpy. And this is where we end up when we get stopped out. At least I do. I want to go see if that stop out matched any of this mass of commonalities of these stop losses. Most people avoid stop losses even in homework. With the algo, we embrace them. And we get a folder for 1.5 years of all the stop losses in this particular pair, in this particular setup, in one folder. All right, so a lot to unwrap in that, as always. You really need these. You need the losses more than the wins when you're starting out because you want to be able to filter those. And, of course, you just keep digging until you find that little ruby that's at the end of the tunnel, but you got to keep digging on this stuff, and you can't stop. Once you find out whatever that commonality is, once you get a sense of it, you begin to filter out that commonality in your trading. So you devise for yourself a little rule set here that says, I'm no longer going to trade into this thing that we're talking about that I haven't revealed to you yet on the H1 chart. So if you're watching this video, I suggest you pause the video, and go back to that H1 chart. Or hey, maybe I can just whip it up for you. I think that's what I'm going to do. I'm just going to show you this H1 chart one more time. Pause the video, grab a screenshot of it, analyze that, and say, why would you not want to go short here? And I hope the answer hits you like a frying pan instead of a minus 0.5% risk stop out. Okay? So we devised a rule set based on this filter, based on our accumulation or collection of losses where we found a commonality, and we X out that we're not going to trade against the blank, right? So that becomes a primary rule, maybe an additional rule that we have to make for ourselves. And this is actually very, very important, because if you're using the M5 viewer for studying entries, in this case, you can see the perfect entry right here. If you're studying entries using the 5-minute chart, all of your entries need to be based on a closed candle. You don't want to go in the middle of the candle, because a lot of times what they do is they make it look like it's going short for 4 minutes, and then the last minute of the candle they run up and hit your stop. So don't do that. And that's a tendency that a lot of people have. They don't take technical entries on closed candles. This was a closed candle right here. We did have a trigger signal to enter, okay, but we wanted to not trade against X. All right, so another rule you should always have, this is so important, I can't even stress this enough, is that when you're below the waterline, which is your starting balance in your trading account, make sure you never take a trade that's higher than minus 0.5% risk. And you even want to make that smaller, down to 0.25% risk, and then down to a single mini lot if you're pulling back from your starting balance. Remember, when you're below the waterline of your starting balance, you're paying the broker to trade. So any leverage you use is coming out of your own pocket. You want to get your trading account above the waterline so that when you're using more leverage, you're actually using the house's leverage. It's a very important concept. I talk about it at great length. For any brand new people, come into the daily market review, go into Jim's DMR topic session index, and fill yourself with this strategy that's the most important Forex strategy I've ever learned. And I guess I fell upon it pretty much. I had people advising me to not use a lot of risk, but I never knew why until I started running Excel sheets of this stuff. And once I got into it, I realized that, wow, there's no reason when you're below your starting balance, whatever it is, it doesn't matter what it is, for you to use high risk. You want to wait till you're actually well above your starting balance to start to use high risk. And when I say high risk, that can mean 2%, right? So I consider 2% as high risk when you're below the waterline. Don't do it. Okay, so I left the link there for you so you can go back and check out that session. It's very important to get that. So these would be the top 3 rules, I would say. Closed candles, again, the newbies want to get in, so excited, but the candle hasn't closed. Wait for the candle to close. That applies to CAR's methodology as well, as you know. Scaled risk below the waterline, super duper important, because you won't have the stamina to go back and search these commonalities to discover what it is you want to filter out if you've blown an account. It just doesn't happen. So that's where we want to be. And then you're finally able to start to execute. And what I would suggest is you just do the algo one more time with these new modified rules. So once I have that commonality, filtering out my setups, well, I'll go do the algo again and see how the hit rate is. And I got a really great email from you, Nick, or not an email, a Skype. Nick got up to about 72% on some sets. He's got up to 80% in some sets. But once you fill out that spreadsheet and you have nice high percentages and you know it goes back a year and a half, there's a peace of mind that comes upon you that is rather profound because you've actually done the work, right? So we want to get to the point that we can establish for ourselves a rule set that validates back in time to gather 70% win rates and higher. That's really it. We want to get to 70% win rates and higher. And once we're at that 70% and higher, we want to start to execute. At least start to get into a demo account situation where you double a demo account. And then once you effectively double a demo account with the strategy that you've filtered out, you then jump into live. Okay, really simple idea there. Again, we do the demo account inside here between the 70% and the win because there are a lot of things in the platform you should learn, not when real money is on, right? How to size a trade, how to do partial exits, what are the errors of some of my indicators and templates, all this kind of stuff. So you want to work all that out ahead of time. That's basically it. But I mean, the big deal here, especially with algo, I'm going to leave a link for this because it's super duper duper important. You are wasting your time going forward without first going back. Just saying. You can watch all the traders that are doing well in our group and you can try to emulate them and do all that. But until you go back 1.5 years and do the algo, which again, I'll leave the link for this because it's super duper important. Until you do this, you are shooting blind. So you are wasting your time going forward without first going back. Okay, so this link I'll drop for you is the algo if you're brand new. Have a look at that. Super duper important. And it'll get you into this mindset, which we're going to walk through. I'm going to show you what this little X rule is. Don't trade against this is going to help you not get stopped out of these trade sets, right? And you got to not be this guy chasing the money. They got to stop the whole chimp factor. We'll get into a little of that as we progress here. But what is this rule? What are we talking about up here? Drum roll, please. What do you see here? Well, back to this H1 chart. Let's give you a hint. All right, so the most common loss commonality is hint. There's your hint. 24-hour market maker cycle. Does anything look relatively familiar to you? What do you suppose is the direction when you see this type of thing playing out? And it's on a Friday, no less, right? So again, this is a little big thing. I think that comes across correctly. It's a little thing, but it's a big thing because it'll keep you out of 20% of your trades that are against this. Okay? So yeah, trading into an H1 market maker cycle as it is about to shift. Forgot about that one. But if you were spending your time running the algo, especially in these 5-minute type 1 London patterns, your folder of stop losses, a bunch of them, I dare say most of them, would have a trade setup that was trading into this condition right here. And I've cut it purposely. I cut the edge of that purposely because it looks exactly like the freaking chart. Steve, wow. I don't know what to say, man. It's like, I don't know. It's bizarre. It's like walking through a quantum gate or something, to be honest with you. It's like once I dug into his material and it stuck in the brain and I began to see it become this mad addiction of watching it play out everywhere. And then I started to see like Soros was talking gold down right at the bottom of the gold market. Like he was saying, oh, everybody shouldn't buy gold right here. And then gold would shoot up and it would be against one of these market maker cycles. I'd see it happening on CNBC and Bloomberg all the time. It's this weird, strange addiction I can thank him for back in 2011. But you get the point here. You're going to see oftentimes, especially on Friday, a retracement back into the market against an H1 market maker cycle. Now, if you spend time with me in the pre-market sessions, you pretty much know that my primary objective in analyzing an H1 chart to determine levels is to use this visual as a base to operate from, and then to look for the peak and then extract out the potential that is going to be created in this cycle and extend it on accordingly to find where 3 times ADR is, some type of trap area off to the left. But I'm constantly in my brain visualizing this drawing right here. I don't know. I think Steve got heavily into the lower time frame stuff, but this drawing, he draw this thing almost every session, I think, for the first 5 years of him teaching this stuff, right? And then, I don't know, he's got into the smaller time frames, and I guess he sees me drawing it, so he doesn't have to anymore. But he would draw this thing constantly. If you were around 2012, 2013, this thing was just everywhere. Might as well have made a T-shirt. In fact, we did make a T-shirt. I didn't, but one of our students did make an AFP T-shirt. It was a beautiful thing anyway. So that's the idea, right? So market maker cycle, correcting into the market maker cycle, that's what happened. All right, so, the sigh of relief. Now I realize why I got stopped out. Now I can go revenge trade tonight to make up for it. Nope, just joking. You get what I'm talking about here. It's a very important little nuance. Okay, so that explains, and we'll always explain that. Okay, so super simple idea, right? I think you all should get this, right? This isn't a tough concept here. Let's go back into it, right? You see this? Grab yourself a screenshot of that if you like. Don't be trading back into H1 market maker cycle. Okay, moving on. Okay, so basically what we have here is we have the chimp sticking the fork in the light socket, just trading M5s because, there's super duper amounts of cash out there. I'm just going to make a bunch of money. Or you're integrating your higher time frame and lower time frames. Now, I just gave you an example of how I cut out of GJ because I realized on the higher time frame it was no longer in a D1 downtrend. And I talked about getting in the GU short and getting it close to high of the day. I think it was about 7 off the high of the day because it was in line with the higher time frame. So you want to merge these two worlds, lower time frame, higher time frame. Okay, guys and gals that have been around for a while, sorry to duplicate this. But you also have to put it this way. If you're going to do the chimp thing and you're just going to watch one time frame and you're going to narrow down and only look for your setup on the 5-minute chart, please wear the crash helmet. Start with 0.5% risk on each trade. Dial that down into 0.25% on each trade and then go down to mini lots each trade if you're drawing down, right? Because that saves you a whole lot of headaches. Anyhow, it's the difference between hard work and just winging it. That's really what it is. We've talked about the algo. And that actually does take a lot of stamina. If you're looking at every single type 1 London pattern in GU for 1.5 years, I've got 353 examples of all 12 pairs that we watch going back to January. So that tells you there are a lot of them. So you're going to be doing a lot of work. It is work, right? It's not the easy money. The easy money is over here with Chimpy. And there are a lot of people that love to look at a signature trade on the lower time frame and just wing it. So you're not one of those type of people, I hope. Let's check out another one. Here's another one. What do you guys see on this? Have a look at that chart and chime out to me. Let me know what you see. Beautiful, beautiful setup, huh? This is Australian dollar. Good eyes, Mapalo. I'm glad you're seeing this stuff. For someone who stays up in the middle of the night in Africa to watch these live sessions, and still able to trade, and still able to study, you certainly have gathered for yourself a lot of the best of what we teach here. Congratulations, sir. I'm going to send you my money. You trade my money, dude. I'm going to OPM with my Apollo. Other people's money, OPM. All right, so you're all seeing it. What a lovely setup. Type 1 London pattern about ready to do its thing, of course. Let's look at the D1 chart. Have you chime in on that D1 chart? What do you see on the D1 chart? Sitting here at 4 a.m. Eastern Standard Time. Okay. Certainly obvious there. D1 downtrend. Okay. Now we're missing something. What are we missing here? Oh, the H1 chart. Have a look at that H1 chart. What do you see there? Remember, we've cut it right to the edge. This is at 3 a.m. in the morning when we're considering the short trade. So, again, the way that I look at this type of thing is that I'll look at the H1. I'll go look at the M5. I'll go back to the H1. I'll go back to the M5, right? You want to traverse your time frames to perceive, right? So the whole objective with trading is perceiving and then acting at a time where the probabilities are on your side and you know where most of the vulnerable herd is located. So unfortunately for those that want to take this short trade, the majority of the herd is actually short right here. And you really don't want to be short when everybody else is short. You want to be short when they're long. You want to be long when they are short. It's one of the most painful parts of a trading journey, but at some point in time, it does become a priority of you to study what that is and when that is. So again, bouncing back and forth, not a bad idea if you only have one screen. If you have a bunch of screens, you're just moving your head over to the H1 chart, bringing it back to the 5-minute chart. So we see here, price went down nicely, right? So if we took our entry here at market, maybe we waited for the 0-0 pullback. Well, there was no 0-0 pullback. So I didn't get a pullback to my nadir, but you can see it came into day open price. And then it did this awful grind. These are the worst. And this is where you get a lot of the physiological aspects of trading, right? This is where you get various hormones that shoot through your body because you can't physically do anything to push the market or pull the market. Yet, if you're emotionally attached to your trade, you're starting to get the cortisol into your veins. And if you're not acting on it, if you're not doing push-ups or doing some jumping jacks, or I like the trampolines, you got to get over to that trampoline. Once you feel cortisol, I always feel the cortisol in the back, like underneath the occipital ridge in the back of the skull. It's where the skull meets the spine. There are these little wings on either side of your skull. It's the bottom part of the skull. I feel a certain type of tension in there. I know cortisol is shooting through my body. I don't get it anymore. I train myself not to have it, as we'll get into that material as we progress here. But I don't want to have that going through my body if I'm just holding the short and the thing's pulling back for hours. Look at it, 725. So these types of grinds, Steve's mentor counseled him to get out of by just using a 2-hour rule. If it doesn't move in 2 hours, just kill the trade. I can see why he did that, right? Because it keeps you out of these messy things. But cortisol has a tendency to punch all of your vessels, and it's the fight or flight kind of thing. It acts like a precursor to adrenaline. It's not necessarily, but it does sort of go along the lines of adrenaline. It prepares the body to go take some action. If all you're doing is sitting in a chair, gritting your teeth, not taking action, it has a tendency to build up in the body. So you got to watch that. So obviously don't get in this trade to begin with, but we'll talk about that. But let's say you're in it. We're going to go in. We've all been here. I know I'm not alone. Right? You try to walk away from the screen, the thing runs against you. Like, oh man, you feel in your body, right? When it's pulling against you. I want you to train yourself not to have that bodily experience with the markets. And I want your probability focus to be so much larger than that your body's not taking on this tension. Easier said than done. Until then, you feel the tension of a trade pulling against you. You begin to feel that tingle in the back of the head. You get that, it's not really a headache, but it's a tension. You get yourself moving, go do something. Doesn't matter what it is, run, jump, push-ups, get your body, just get it moving so you actually move that cortisol. It's meant to ease. You could go study cortisol, you see what is going on there, but you want to get that stuff moving. You don't want it sitting in your body. All right. Oh, it's finally in my favor. Oh, almost, I guess if I entered here, I'm up 2 pips. And I know you know what this is like because you and I have both been here where you hold the trade all night long. It's a grind. And then it finally goes in your favor a little bit and you feel like you're on the top of the world. And this is again where this agitated chimp mind that we have, we've isolated ourselves so heavily in the intellectual personality that most of us are raving lunatics, frankly. And it's totally true. It's not until you really slow down that you get the rest of your personality to come online. When you're in a speedy state, when you're in a tense state, when you're in that kind of, I got to make it happen state, you basically slowly go insane. And that's your intellect, which was never intended. Cain was never intended to take over the entire world, man. Your brain was never intended to be taken over by the left hemisphere of your mind. It really was. It's not designed to do that. So, but you feel like you're a king of the mountain when this thing goes in your favor. You're like, oh, you want to show the girlfriend, look, I'm up 2 pips. And then, Chimpy doesn't know what happened to Nana. Where did Nana go? Well, anyway, let's dig into this. Again, the reason for not taking this trade, or maybe taking down here, the reason for not taking this trade entirely was on the higher time frame. So again, cautionary tone. You should all see exactly what happened here. We walked through it. Did a pretty good job of it, so we don't really need to do it again. It's sort of the same thing, don't you see it? All right, so that market maker cycle that you're trading against was looming in your face here. Now, note the days. This is very important because when Steve originally drew the H1 market maker cycle, he did it within the confines of the week itself. Monday, Tuesday, Wednesday, Thursday, Friday. False move, week beginning. False move, week ending. All right, so we have a tendency, if you see a market maker cycle that's painting this clearly, and you're thinking about going short before that thing is fully shifted out of this bottom edge, you want to think again. You want to back off from the screen. And I'm pretty sure, this is Friday of last week, I'm pretty sure, what was the date here? I don't have the date. Let's see, let me pull this one up. I can get a date, the 12th. So we actually did have a type 1 London pattern on the 12th in USD CAD that was actually in line with D1 trend. We'll go look at that after we complete this one. But when you're getting into the idea of filtering which pairs to trade, I think the strongest thing you can do is let the higher time frames do that for you. And the tighter you filter down, the more pairs you can watch. So if all you're doing is taking trades that are in line with D1 trend, well, there's only going to be a couple pairs a night that really do show promise. So you're instantly filtering down. So just leaving that out to you. We'll go look at this one here in a second. Oh man, let's look at this right now. So at this very moment, let me just clip it. So at this very moment, this is fun actually, because it simulates what you would be doing live in the market. Because if you passed on this trade right here, well, you look around the board. You look around the board and you'd see the possibilities of other things. Let me see if I can get a higher time frame chart going here. So I've got the lower time. Well, that shows us it gives us enough right here. So let's take the USD CAD. Let me move this off the screen so I don't lose it entirely. But while this AU was about to faceplant, this was going on. Same exact moment in time, right? Same exact moment. Look at the breach of the Asia range on the 15-minute, right? We've got our D1 chart. Look at the D1 chart. Everything is looking rosy for a D1 long trend. D1 long trend condition. EMA is all fanned out. And let's go have a look, see at the actual set in UC. There it is. So there's USD CAD, the lovely W. You had your shark fin alerts. You had a shark fin alert back here. I'd basically ignore that. I don't really turn mine on until about here. And then this would have played my tune, would have heard a little piece of a tune, not the whole tune, just like 30 seconds of it. That would have notified me the possible first leg, pull back below and then above, and entry Yahoo's a woozies. I don't know. That's bizarre. Interesting. So, yeah, so it did a nice move. That's actually kind of cool. That's the broker actually puking up. That's not when it did. Anyhow, we got a trap through that 0-0 figure. That was the broker puking up. That's a very odd thing. But this is what actually happened on the move. Trap through the 0-0. So you got at least a 2-1 on this. A beautiful trade in line with D1 trend. That one worked out in USD CAD. This one, not so much, right? Notice the days. Always carve the days. Friday back into the range. Poof. All right? Such an important concept that y'all need. And this would apply to any trade setup. I don't really care what it is. You can see right here the possibilities of a type 1 London pattern working, and none such. It did not work. Okay? So everybody's got it down. So, yeah, you could say no trading back into the peak, but it really hasn't formed a peak until the close of the day. I call it no trading back into a market maker cycle that is in the process of correcting, because I don't think the peak actually shows until the end of this day. For instance, now we can identify this as a peak. When we were back inside here, yes, it could have been a peak, but really what it was your level 3 correcting. It was a market maker cycle that was ready to correct. Okay, so for those of us that are as interested in the higher time frames as we are the lower time frames, well, trading becomes like this. You're pushing a ball forward. If you're just looking at the narrow time frame on the lower time frame, well, you're moving your box one at a time, but it hurts. Okay, so get yourself into the mindset you really need to be, and it's to chart out these market maker cycles. I spend basically hours a day. Well, not any more hours. It's probably 30 minutes at this point. It used to be hours. About 30 minutes a day, every day, doing this across 12 pairs, right? Regardless of if I'm doing my pre-market. Really, my life doesn't change. My pre-markets I do anyway, and I do everything. It's all there, and so I don't change it. I just basically do it every day. You chart out your market maker cycle, project it out where the level 3 is, find where the 3 times ADR condition is, get all that stuff in play. In this case, we had the TDI on the bottom edge, just starting to hit the boundary. Not quite a full out shark fin there, but still getting to the edge, and you've got your sub counts down at the end of the day. So close the day, low of the day, close of the day, low of the day, close of the day, low of the day. Gives you that sub count step down. So not trading into that is a very, very good idea. So train yourself to see these cycles on the H1 chart, I think is the moral of this story, Maury. And get to the point that you can trade in line with these and not against them. That's really what it is. Trading in line with the market maker cycle as opposed to trading against it. Okay, hard work beats talent when talent doesn't work hard. I love it. Love the quote, love the quote, love the quote. So 2 choices here. Either you get trapped by the lucre or you go back and do the algo. And I say that with, I don't know. Steve does a better job with this than I do in terms of your seriousness about what you're going to do. So I don't want to walk on his thing because that he does. He's been doing great sessions on that. So we'll just transition here back into our mind component of the session now that we're 55 minutes in, 50 minutes in, I guess, 49 minutes in. I got a great Skype from someone. Again, when I get Skypes, I don't want to reveal it, especially when it's this type of intimate information. Okay, so average person lives up here in the conscious mind thinking that's it. They're told about this thing called a subconscious, but it's really not subconscious, it's superconscious. They're not told that it's superconscious, right? But you've got all these things like placebo, where half the people heal up after they take the same medicine that might kill half the other people that took it, right? You got this weird placebo thing that's going on. You have all sorts of other ideas that we can talk about. But the idea is that most of what's inside your conscious existence, you have not explored yet. You have not been there. It's waiting there latent. It's actually in your operating system. You just haven't done the proper upgrades. You don't have the proper hash key to get in there. And the idea that some people have this and other people don't really is not about there being a factory defect in you, because that's absolutely false. Everyone has the potential of using the superconscious mind. How do I know that? Well, I went through it. I fancy myself as a true knucklehead for a good portion of my life, and luckily cracked the shell here a little bit and experienced a little, just enough to know that, yeah, it's real for me. That means it must be real for everybody else. So things like waking up right on time with an alarm clock, I don't need it. I can look at a clock. I've trained myself to do this. I've tried to teach you guys to experiment with this, but you take an alarm clock on the side of your bed and you're going to get 7 hours of sleep. You focus on a number that you want to wake up at. That's a minute or two before your alarm goes off. You set the alarm just in case, but you focus on the clock at 6:58 a.m. instead of 7 a.m. And you let that settle down. You give it 33 seconds to lodge into the superconscious mind, and that becomes one of your last important thoughts when you fall asleep. Then after some practice, you'll end up waking up exactly 2 minutes before that alarm goes off, and then you can tighten it down even further, go 1 minute before the alarm goes off, and you'll wake up 1 minute before the alarm goes off. This will happen so many times that you no longer have to set an alarm. All you need is a digital clock. You look over that digital clock, I'm going to wake up here. And it can be 4.5 hours later. I've done that a lot. So that's something that I can say is tangible, at least on my side. I can rely on that. I know it works. I don't have any inhibitions at all with doing that. And I know that the superconscious mind will wake me at just that moment when I put it in there. That is some crazy, crazy stuff. Okay. So we're talking about the conscious mind being where most people are, very narrow-minded, not perceiving the totality of the game board. Whereas this stuff down here is latent. And I submit to you that these dudes back in 134 years ago knew exactly what was going on with this stuff. And this dude back here said, what if I could do this with it? And they kept it out of circulation, so you don't know what the rest of this is. Okay, so it's a little bit of induced trap shift going on when it comes into the mind stuff. But I love it when I get these types of responses in Skype, because it tells me this individual is actually trying this. So what was our objective last week? Going to last week's lesson, we were going to hold the mind on one thing and one thing only without letting it move around. We were looking at the sand particles falling down an hourglass, and we were focusing only on that. Every time that the mind drifted, we'd make a note on a piece of paper how many times in 1 minute that our mind had to be reset. And eventually you get to the point where you work almost like a muscle. You get it so that your mind doesn't drift. And over the course of 1 minute, you can hold it clearly on the flakes that are dropping in the hourglass. You move up to the 3-minute hourglass and you work with that one. And you get up to the higher numbers and you're able to hold the mind steady without any thoughts interfering. That's a skill most people can't do. Why? Well, Bugs Bunny, CBS, ABC, NBC, name it. All right, bells at weird times in your school. Get into your class at 8:06 a.m. or 12 a.m. I mean, it was weird times, bells ring. Everything about our world has been to jar us to keep us up in this part, right? Cain owns the plane. Abel's down here. All right, so let's walk through this individual's statement. I noticed strange psych issue. You can tell English is not this person's first language. I'm walking through M1 setups in the viewer. As trading simulator, candle by candle. I rethink every candle, what's going on, and have some negative feelings, superconscious signals that it's too hard to trade. Now, this is actually a good thing, because until you have a setup that has a high probability hit rate based on the higher time frames and the lower time frames, a pure superconscious mind will tell you, danger, Will Robinson, alert, danger. That's actually a good thing. This tells me that this individual does not have their signature trade fully in socket and does not have a 1.5-year look back of the exact parameters of that trade to the point that it's a 70% or greater winner. So this is where your superconscious actually helps you out. A lot of people in trading are trying to fight fears. Well, I'll tell you, that's actually a good thing to have. You need to have fear, because if you make the wrong step, you blow your account. I want to make sure my superconscious mind is able to chime into me that I'm not ready. So really, you got a message from your superconscious mind. You need to keep working it. So don't try to get rid of that fear idea. Embrace it, because it actually is meaningful. If you're using ridiculous risk and you don't have any type of a high probability approach to your trading, well, then you're gonna hit this the wrong way. And you should have listened to that superconscious part of you that said you should be afraid. If you don't have it systematic yet, you got to get it systematic. It's always going to be a gamble. Once you get the trade on, type 1 London pattern in line with D1 trend, all that, it's still a gamble. It's still going to be a probability thing. You still don't know for sure. Every plan, when it faces the first encounter with the enemy, basically has to rewrite itself, right? You get all that. You have to understand trading's similar, but with trading, we have a little more to work with because we're working with those higher time frames. Anyway, so superconscious signals that it's too hard to trade. That's not a bad thing. I wouldn't compel you to try to get rid of that. That's telling you need to do algo more. But if I convince myself that this is for educational purposes, I won't trade this, then superconscious does not resist. Of course, it backs off when you're not using real money. So remember, this part inside you is the ultimate experience supercomputer mainframe. Remember what life is. Life has been building on this planet for billions of years. We could say that animal life has been building for hundreds of millions of years. All the fossils say that. So this part of your superconscious computer inside has all the experiences going back to the first single cell of life. And it translated into the vegetable kingdom, into the minerals, into the animals, up to the human. It has all of those experiences gathered inside of it. So it's going to try to warn you when something appears to be dangerous. In this case, I would say that that's actually probably not a bad thing to have. And you'll get to the point where, after you recognize the exact probabilities and you recognize that, yes, you're taking a chance, but it's a 72% chance, somehow, some way, that superconscious chimes in and says it's okay. It's very, very mysterious, this stuff. Anyhow, so you don't want to try to over-convince yourself to not trade. That's not it. Moreover, superconscious sabotages to start the next simulator session if I don't convince myself that I will not trade this hard stuff, just observe and knowing how it is. Yes. So there are two sides to this. One is that the nature that's in you, that's been building life for billions of years with all that knowledge built in, is saying, you're not quite ready yet. You should take its advice. It's been around for hundreds of millions of years, right? At the same time, we can have doubts and things that are put in from childhood that are negative ideas. Like, for instance, I was taking that GU last night. I was in the thing for sure. And I was hitting these things. Okay. So I'm in my GU short last night and I'm watching the dealers do all this stuff. I'm watching it run back up. Well, I have within me certain experiences from youth that have me question myself, question things. So as the dealer's working his stuff here, I can hear those impulses from within that are from my childhood pushing to say, you know what, you should click out of this trade. Just walk from this trade. It's just better to just break even than you don't have to have the pain of suffering a stop loss, right? But then once I saw the massive amount of volume absorption on this candle and I knew it was going to drop, I was able to quell those voices and keep them quiet enough for me not to click out. Okay, so there is some stuff inside here. Now, the beautiful thing is that since I gave you this exercise to focus on one thing at the exclusion of everything else and do it in a systematic way that you can gauge your progress in doing it, when you can hold yourself steady at a great length of time without any thoughts coming in and you actually have the helm of thought underneath your control, you'll actually start to hear these things pop in. It's almost, some people call them voices. I don't like to use it so much as voices because if you go into in the U.S. prison system, one of the ways that they like separate the real crazy prisoners from the, I guess, not crazy prisoners is they have an input form that asks if you hear voices. Do not check the box you hear voices if you're talking about spiritual insight. Just don't do it. But you get what I mean. It's like called spiritual insight, but it's really not. It's the 200 million years of nature having built this incredible creation with all of the terrors along the way. Think of the dinosaurs dying out. Think of all the the traumas that have happened to the earth, life always comes back. It has the knowledge of how it's built itself up. And you have inside your being all of this knowledge, but you don't recognize it until you slow down the chattery conscious part. So you get that conscious part out of the way, you slow it down, you do the exercise, and as you do the exercise, you start to hear these impulses that are coming to you. In this case, this individual doesn't want to trade all that much because there's something going on there. Not only this idea of you don't have a system yet, but additionally, there are probably some youth memories, something that happened with money that's inhibiting the idea of just gambling itself. So this is an aversion to risk is what I see here, just super strong. Risk aversion. Okay, so there's a plus and a minus side to risk aversion. Okay, so this is a little different type of trading psychology than you're used to. I'm telling you to embrace the fear that comes up if it's a reasonable fear. And I'm also saying that same fear impulse might be something else that's from your childhood where there's this fear of sabotage or fear of something going wrong. And we all have it, especially if you're trading on the absolute top edge of the market, right? So if you're crazy enough to start trading short when this market looks like that, you're going to face some of these voices in your head and you're not going to see them until you really calm down the conscious mind. Okay, so a little exercise for you. You may or may not have this experience, but the next time you're talking to a friend and you're in a conversation and your mind is going quickly and you're excited and you're trying to convey something to them and you get to that point that all of us get to where you're trying to think of a word, but you can't figure out the word. I had it earlier in the session tonight with the word cortisol. I had a blank in front of cortisol. I wanted to say cortisol, but for some reason I couldn't remember the word. What I want you to try to do when you can't remember that word is to instantly go into unthink, which is where you stop the mind entirely. So you're in a conversation with your friend and you're in mid-sentence. And during your mid-sentence, there's a word on the tip of your tongue that you can't figure out. If you say to your friend, there's a word I can't figure out, chances are the friend's also going to go into that state. Yeah, I know the word. Yeah, I know what you're talking. No, I can't figure it out either. And both of you would sit there trying to force your brain into remembering that word. It's opposite. It won't come up. But as soon as you let go and don't try to look for the word, pretend you don't forget something. Like basically throw yourself out of your conscious mind for the moment. And you'll watch that word hit you so quick. Bam. That's what I had with cortisol earlier in this session with you guys here in 3D. I was talking about it. I didn't remember it, but I didn't force it. I just relaxed the brain. I slowed it down. And when you can slow down the brain, all of a sudden the associative memories pop right back up. So this is why TV, especially CNBC, CNBS as some call it, especially their financial news stuff, when you turn that thing on, it's like you're on this crazy carousel that's on speed, man. It's just insane. And the pace is necessary for them to, have them think for you, right? If you slow down, right, go watch any of that Kramer stuff. It's always speedy. He's always on edge. Market's going up, market's going. He's always fast paced. That's what they do to make it so they think for you. So in any circumstance, slow down the mind. Try that experiment next time you can't forget, quote unquote, that word. All right, let's send you my responses to this individual. Superconscious signals that it's too hard to trade. Oh, yes, I've run to that one many times early on. Okay, so again, I ran into that trading the high. That's why the high-low drill is so important because it immediately pushes you into the resistance of going the opposite way of the herd. Okay, so I'm going short here. That hurts. Your brain's going to go a little bit crazy. So I totally get that. I've been there. And then she says, but if I convince myself that this is for educational purposes, I won't trade this, then superconscious, not resist. Okay. Yeah, the best way to see it is that it's all you. So your superconscious is you. There's nothing outside you. That superconscious is you. The subconscious voice, which I choose to term as the superconscious voice, the one hearing it, that's you. All of it is you. So there's not things outside you. All of this is you. So any negative momentum developed earlier in life will tend to impose itself unto trading until you make the voice clearly known and reason on it. So you need to hear this voice out. There's something that's triggering that voice of it doesn't want to keep trading. So when you can slow the brain down long enough, you hear these little recordings that are from your superconscious mind that tells you some ridiculous stuff. And as soon as you're able to see how ridiculous it is, it changes on a dime, but you have to trace it back to its origin, which oftentimes gets into psychoanalysis and all this. You can go overboard with that stuff for sure. A lot of people can just pray and it comes up. So there's no right or wrong here. It's just as soon as you unwrap whatever it is that's in there that has this negative loop, see it for what it is, you reason on it. Oh man, I can see why. I was 4 years old at that time. I could only think like a 4-year-old. I didn't know all this other stuff was going on. The way the superconscious works is it projects forward in time where it still thinks you're 4 years old. It's still responding as if that's happening now. So as soon as you unwrap and say, no, the parent didn't mean to take that from you. It was just her getting pissed off when she threw your tricycle over the side of the cliff. No, it doesn't mean you have lack, and doesn't mean that you can't have what you want. Your mom just got pissed off. She was going through her own stuff. She was going through that time in the month or whatever. No disrespect given. But you see what I mean? So you take it out of its primordial form, and all of a sudden you reason on it, it just breaks up. Okay, so you'll be able to break that if you see it, but you can't see it unless you absolutely shut the conscious mind long enough to be able to let this stuff come up. Triggers, all sorts of triggers we have. All of us have triggers. All right, so likely it's not operating from sound reason. So you'll find something that's not reasonable. So the more you become aware of its false nature, the faster it merges back into the noise, the depths where it comes. And it no longer pops up at the inopportune moment. This is good news to hear you processing these things. So this is progress, right? I slowed down my mind. Here's the noise that I'm hearing. Bravo. That's where you start. It gets noisy. It's really nasty. Okay, so good news to hear. Several very clean M1 trap through 00 figure setups happened this week, many with higher time frame confluences. Yup, they did. Let me just go into this. Again, I hope you're all utilizing the material that's brought to you, but these 4 happened last week. Okay, so I'm talking from experience. On the 8th, there were 2 M1 trap through 00s. The 9th, there was an M1 trap through 00. On the 10th, there was an M1 trap through 00. So there's viable trades out there that you need to also realize. Okay, so your mind is going to get in the way until such time as you unwrap the trigger points and then see the abundance, and then you'll get back into the flow, right? So many higher time frame confluences also. Just observe for knowing how it is. Yeah, that's what you do. Yes, become more aware of these sabotage ideas circulating deep under the water. Pull them up, like draw that out. You want to draw that one further up. Go back into your childhood, do what you got to do. If your parents are still around, go have a talk with them. Let them piss you off. That might actually lead you into what the source was, right? So we tend to avoid the family that pisses us off, but if we were little kids and that was going on, you want to basically crawl back into that hellhole and let it come up and find what the trigger was and reason your way out of it. So find areas of your life that may have been the reason for their responses, these responses down here, and walk them back, because now is not then. Again, your subconscious memories of all this stuff treat what happened when you were 4 years old as going on still to this day. The subconscious mind doesn't actually have time. That's the conscious mind. Anyway, don't want to get that far into it here, but you get the idea. Now is not the past. Train the chimp. This is how to train the chimp. Slow the mind down. How am I feeling right now? Why did I click out of that trade early? What's going on? Well, slow down the brain and you might see. Okay, so early on when I first joined Steve's stuff, I got into this quantum jumping thing, which is kind of neat. Burt Goldman. If you want to check that out, go for it. I went pretty heavy into that. It was very helpful for trading. It's a little out there, so I don't want to add a lot of emphasis on it, but have a look at what it is, if you like, just as a study. But these were what we had last week. Again, this was our objective, was to hold the mind steady first for 1 minute, then 3 minutes, and 5 minutes, and 10, 15, and 30. Not allowing any other thought to come in except the grains of sand falling. It's hard, but you get all this. A lot of good stuff happens with this. So that's the thing. What this individual was seeing was when they went into this process, immediately started to see the demons that are inside of us. And all of us have these things, and it's been given various names. But these are all impulses, right? You've got 200 million years of life experience inside you of the first protozoa building itself all the way into a triceratops that got completely hammered by a event that no one knows, where all the dinosaurs died off, and then that evolved into a birdie, right? So you have all of these trials and traumas, and there's a lot of reasons why you have all this energy inside the supercomputer. You don't want to diss it, but at the same time, if it's not serving you, you want to discover it and get rid of it. So that's the idea. Early on, the drawings of demons were actually pretty cool. It would be as if you were sleeping and this little creature would be sitting over you, hovering over you, basically giving you negative ideas. And we know that's basically the identical thing that was discovered 134 years ago in the Salpêtrière Clinic, right? where the subject was put into a state in which case she went full lethargy. She was out, gone, poof, out. And these guys were all watching, and they did a lot more than that. They really did some amazing stuff there. It should have been public knowledge. It never was. But anyway, that's what we're dealing with here. But these ideas can reside in the lower portion of your brain. So let's get real here. Cain and Abel, that was completely written to express the left and right hemisphere of the brain. In my personal opinion, read it. You'll see it's there. Cain has to get rid of Abel. Cain kills Abel. Says remember the story. Abel is one with the Spirit. Abel is pure in all ways, and he's connected with God. Cain says, no, I'm jealous of you. I'm going to get rid of you. And now all of us are walking around basically with an out-of-control intellect, and we have no real comprehension of the rest of ourselves down here. And we act accordingly. If we're going to use this diagram, we could put our intellectual consciousness up here, and we can put this nonlinear super consciousness down here. And when we shut this tick, 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 tick mind for long enough, we start to hear this stuff. And a lot of us don't want to do this because the first thing that comes up would be one of these bad guys down here. Okay, or it could be the chimp, and it could be just the sheep. Go along to get along is one of the ideas that sits in the bottom of your consciousness. A lot of cells learn that when they gather with other cells, they're protected from the predator. So you have a part of you that's designed literally to protect yourself from predation. And that's down here. So where are they appropriately used? Where are they appropriately managed? Where do I put this stuff? That's going to be what you have to do. It's a full life story here, what we're talking about. But eventually, what you do is you get the proper hash key, which we've talked about here. Half of our lesson here is the hash key. And that is this idea of concentration. And you can actually gain access down here, just like that individual did that Skyped me. And that's what happens when you slow the brain down. You start to see all the rest of these things that are coming in and chiming in, and all of us have them. Okay, so it's concentration and intent. I'm not going to get into the intent side. The intent side is it's good for life, it's good for myself, it's good for my family, nation, country, all good for everybody, right? So intent is a loving intent where you have the, I guess you'd say right action to life would be the best way to say it. I'm not going to get into that because that gets in ethics, and that is for your own thing. But the other side of the hash key that is necessary to drop down into unthink and to get this pure signal is literally concentration. Most people, because of a lack of an ability to concentrate, never gain access down here to the rest of themselves, which has all these demons down here, but they're angels down here too. Okay, so I don't want to go too far off here. What happens is that you eventually get these negative tendencies to show themselves. And when you see them for what they are, it's almost a humorous thing. You disrobe them, not by making them outside of yourself, but making them a part of yourself. You say, okay, that's an instinct. That's an instinct. I can use that in certain times, but I don't need this in other times. And they go away. And you gradually get rid of those voices, for lack of a better term, that individual who Skyped me will do if he, she, it, they persist in this exercise. That's part of the exercise, is to see what makes you tick and to hear these things. Okay, so what happens is Abel is no longer out of the picture. Cain and Abel work together again. They work together as one, and then that's basically the whole idea. So yeah, watching the actual sand particles drop for 1 minute, 3 minutes, 5, 10 minutes, when you can do this without letting other thoughts come in, this whole thing starts to open up. And you'll see it's quite natural. You'll remember words quickly, all this good stuff happens, and it's as if all these mainframes come on. And from a strategy standpoint, there's nothing better, because what happens is that you no longer only see your position, but superimposed upon your position is the enemy's position. Or in this case, we'll say the broker. He's not the enemy, really. It's the uneducated retail rabble is on the other side. From the standpoint of opening up to pure signal, you will see the vulnerable herd in the market, and you'll be able to strategize accordingly. You'll be able to sit into a setup that's drawing out like this. And I had it at this candle right here. I knew that was the last call for those people that were going long, and they got a lot of people long right there. I knew the market was upside down right there. I knew it was mostly longs, and it was just a matter of time until the dealer unwound it. I knew it because this kind of stuff was going on. So positionality, super important for anybody who's involved in strategy of any kind. But really, it's not so much your position that matters if you're in a conflict, right? It's also the other guy's position that matters. So if you're able to achieve this type of very clear unthink, think yourself into unthink, you will be able to see not only your position, but the position of your adversaries as well. You'll be able to see them in stark living color, because Abel's helping you out, and Abel just so happens to be intimately connected with all of them. He's stuck into everything. So just understand when you're dealing with this, it's pure signal via faith, ease, peace, and inspiration. You do have access to all things, but it's just a question of how far along you got to be able to slow the brain down long enough to be able to make the necessary jumps, to be able to see what the other guy sees, to be able to see where the other guy is and what he's planning and what he's doing and all the intricacies of what's going on the other side, right? So then you get in the idea of, whoa, I can see now why this stuff wasn't exactly allowed to go into mainstream. Yeah. That would make a lot of super powerful people out there that would now know what's going on. Well, we see right now it's kind of happening. A lot of people know what's going on. Well, a lot of people are working their wiring. So that's the idea. You got to get in there to make these adjustments, and gradually you work yourself from an intellectual lunatic, gradually finding all the demons inside you, finding what their sources were, and then slowing down even further, you start to find the good stuff and the good stuff. And you feed on this, and eventually this circuit starts to open up. And at any point in time that you come up to a very important decision, what is the very first thing that you do? The very first thing you do on a very, very important decision, you consciously stop the mind. And you go into basically void. You just let that, and the more practice you've had with it, the easier it is for you to, then all these start to pop online. Blink, 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 blink. They all pop online, and then the stuff comes right back up. And you're basically healed of the wound that we all took in the fall, which is the Cain and Abel story, which was superimposed upon this. And again, this is kind of what they did with the book. They made it this abstract fairy tale to throw, because if everybody knew that was what was going on inside the two hemispheres of your brain, you'd have a much different civilization right now. You have a lot of smart people. Anyway, water under the bridge at this point. We'll carry it further. So, looks like in the time remaining, what do we got here? We're at got about 15 minutes. We can cover type 2s in 15 minutes. I think that's doable. So let's jump out of that deep end of the pool, and let's talk about type 2 London patterns, because they're a very important trade setup in your strategy, especially if you're leaning a bit harder on the higher time frame confluences, because your higher time frames are going to give you those bigger momentum ideas. Again, just referring back to my trade from last night, not only the zone flip, but the D1 trend, right? So the fact there was a D1 trend in play was a big deal. So if you're into utilizing the higher time frames, you're going to have fewer setups, but when the setups happen, they do have that higher time frame confluence. The type 2 London pattern is a great way to get a little more inventory into your setup. So what you're effectively doing is you're adding a second signature trade on top of your first signature trade to give you a few more opportunities, because not all D1 trends have type 1 London patterns. Some of our D1 trends translate into a type 2 London pattern. Okay, so it's a pretty easy concept to recognize here. I think you've all seen this before. Give me 1 second to fuel up here. I always enjoy traversing very quickly from the fourth to the third dimension, but that's all right. This is the future of humanity at play here. Because I'll tell you, once everybody's on this level, once we're all at this level, you start to talk a lot less. And when you're around someone who's done this type of rewiring, your brains are linked up in a way that words become less and less necessary and thoughts transfer. Just saying. And that's good with groups, like tight groups, like groups of 3, 4, 5 people. You want to train this kind of thing. You want to train yourself into unthings so you can easily read at a distance what is going on. So talk about, what do they call it? Command, control, and communications. I call that C5. They got C cubed, but C5 I think is the future. Anyway, that's a whole other story. So anyway, back to type 2 London patterns. Just had to get that in. Type 2 London patterns, the first sign of a possible type 2 London pattern will be the TDI shark fin. And what you're going to see is you're going to see a very slight TDI shark fin. And let's go back into last week so we can go through some examples of these. And we'll go pop up our type 2 London patterns here. And let me just click that, and that'll throw one up. And let's do that. Actually, I want to do it on to the 15 minute, just because I want to show you guys this on the 15 minute. And let's do the same thing. Let's keep the D1 trend in there. Why not? Let's go to type 2 London patterns that were in line with D1 trend. We had 4 of them last week. So let's click this one. Okay, so here we go. So let me show you the example of TDIs giving a possible first leg. Okay, see that? See how it's way out there? This one didn't, but this one did. So that is a indication of a possible first leg in the box and a possible second leg out of the box. Now here we can see obviously 3 legs, but our D1 trend, you can see how it's actually in play. Price is below the 50, 80 EMA is headed short. And we got this really nice slight trap through of Asia range, which is one of our type 2 London patterns. That's where we get the extended second leg. It's a type 2B. And it's really nice because we know that breakout traders are triggered in long at that moment, and then price pulls back away and then creates the rundown. Shall we go have a look-see at what happened here? Okay, so you could certainly be in here. One thing with type 2 London patterns, oftentimes they do happen early, especially if they have some nice higher time frame driver behind them. But you can see this one did come up a little bit in the Frankfurt box and then drop. That would be the technical entry, stop loss above. And this one came back pretty hard, but it gave you the type of trade that a lot of us love, which is, again, I'm looking at a 1.5 to 2 to 1 reward risk ratio here, and we're right on the edge of a 2 to 1 here. So that was a 2 to 1. Notice the zone flip, really strong zone flip over here. You'll see that, so you wouldn't have wanted to hold also based on the strength of that move. Let's take it down to the 5 minute because type 2s get really juicy on the 5. So this would have been the key entry right here. Entry, stop loss above the high of the day. You've got D1 trend behind you. Now watch it run down, holds the 382, and there's your vector acceleration. Now you're starting to trap through the other side, so now I've got breakout traders that are starting to enter the market short. I know the dealers are probably going to pull back against them. So this is where I grab my TP. So this does seem to be just about a 2 to 1. Again, with the type 2, I definitely want you to think about splitting your order where your first order goes on at the technical entry and you reserve a little bit for some type of pullback and then take the pullback. Use car stuff. Basically, it's the same thing. I do the same thing all the time with my 382s. So you're looking at pulling a fib here and you're looking at this area between the 618 and the 382 as being the area where you can grab another entry. Okay, so that's a type 2 London pattern that worked out in line with D1 trend that perfectly exemplifies this shark fin early on. This only happens about 65% of the time, maybe a bit more. I haven't done the calculations in a while, so I'm not exact with that. But somewhere about 65, 70%, you're going to get this. There are going to be a lot of type 2 London patterns that don't give that. Okay, so don't firmly rely on this little shark fin. It's also not going to give you a shark fin alert typically. But don't rely on that. Okay, so that's just one of the 4 that lined up last week in line with D1 trend. So that's a type 2 London pattern TDI. So TDI starts to kick in sometimes in Asia. I hope that all makes a lot of sense. Now let's talk about ideal higher time frame conditions. And we just walked through an example of a D1 downtrend, which is really, I think, probably one of the strongest of all of the higher time frame confluences for any trade, really. We had an ID50 that popped off today. I think, which pair was that in? It was an EU. Check this out for Cars Group. All right, they don't say to mixed instructors, but I say to mixed instructors. So, take it with a grain of salt. Look at that D1 downtrend just smoking along there. Look at that thing. So that's a strong D1 downtrend. This is where your ID50 was. Okay, it was up into a previous high volume area. There's your ID50 on the 15 minute. Everything by the books, right? You had the 25 pip pullback. You had the first tap to the water after the close. It was an ID move, actually. But notice the follow through on this thing. Here's your 5 minute. So real nice follow through, in part, I believe, because of the D1 downtrend condition. So D1 downtrend condition can help with everything. It definitely helps with type 2 London patterns. It brings the numbers way up. As well, in line with AFP or AFP reset conditions. So let us go back here and have a look-see. That's the wrong one. Where's my other? I get all messed up when I start to get too many viewers going at the same time. Where's my setups window? Oh, it's over here. Okay, so those were all in line with D1 trend. Let's see if we had an AFP last week. I don't think we did. No AFP. Did we get an AFP reset? No, we didn't. But if you're looking at type 2 London patterns overall, let's open up the filtering to include all of them. And let's look at AFP conditions. You've got 44 of them. Let's look at AFP reset conditions. You've got 18 of them. So a lot of examples in the database for you to go back and look at. Type 2 London patterns away from peak. D1 trend, you've got 93 of them. So again, the D1 trend seems to be the most prevalent of higher time frame conditions for type 2 London patterns. And let's just narrow down here in case we want to look at a couple of the other ones from last week. Let's go ahead and trigger that one. Why not? So this is GU from last week. This is a type 2 London pattern. Let's, whoopsie, I didn't mean to draw on it. But let's bring this fella down here into the screen. And again, you can see shark fin on the possible first leg, second leg. Now, this one's getting into this other variation that doesn't quite get up to the Asia box, which did happen last night actually in, was it EJ, I think, or was it EC? I think it was EC. I think it's EC. Didn't I? I guess I didn't take a picture of it. No, EJ was the first one I said. It was last night. This one. Okay, so last night, look at this. Type 2 London pattern. Strong D1 downtrend. You can see the D1 downtrend, all the EMAs opening up. We're just getting into the L3, so we're not trading back against it necessarily. And here was your entry on the 15. Here's your entry on the 5. The 5 gave you a near instant 2-to-1 into day open price. So that was EJ last night. It's this one here. It's a slanty M or W. So it's this type 2C where the second leg doesn't quite get up to the first leg. And that's exactly what we have here in our example from last week, type 2 London pattern in GU. Okay, close below, entry above, on the way. And these a lot of times do run like gangbusters. So this is the reason that you might want to mix in a type 2 London pattern into your trade repertoire, because oftentimes you do get these moves. And again, apply your fib trailing from the high of the day to the low of the day. It looks like a perfect 618 right there. And you would have been able to hold through the whole thing. If not, you grabbed from, down here. So from here to here with the stop loss above. I'm just eyeballing this. Not really getting too precise. That was a nice 4-to-1. So you can grab some really nice gains on these going forward here. Looking at type 2s that are in line with D1 trend. I've shared my Excel sheet with you all before. You've seen it way too many times. 80% hit rates on a lot of these. Here it is in GJ, another one from last week. D1 trend very clear. First leg, clearly, little shark fin, little tiny shark fin. It's not usually going to get up into the distant area to trigger the actual shark fin alert. Don't rely on that. But it does give you the RSI lines outside the band. That slightly hints that you have relatively 65% potential of this being the first leg. And then watch your second leg. Look at that. Just close a little bit above. That's all they need. That's all they need. And this was one of the occasions where you wanted to be out at the trap through here. So again, digging into the higher time frames is always going to show you the reason why you wanted to be out here. And that, again, would have been this zone flip. Look how clear that zone flip was. I guess I could draw it probably with a little more accuracy this way so we can get to the precision of it. So we were trapping through that zone flip, trapping through the 0-0 figure, trapping through yesterday's day open price, trapping through Asia range. 3 sets of breakout traders short in addition to clearing this zone flip. This is most likely a near-term long, but the short worked out really nicely. And perhaps let's go look at the 5-minute chart just to gain some insight about that. And I'm doing the copy-paste type of thing back into the 5. So this one just dropped and then dropped. So here was your zone flip pullback, and then it dropped there. This is one of my favorite patterns. I love it. Railroad tracks and a pin. It's great on most time frames. Obviously, you want to have all the higher time frames in line. But remember this candle pattern right there. Remember the railroad track pin candle pattern. It's a beautiful, beautiful candle pattern. Obviously, you would have wanted to grab the pullback to get in this, but it still worked out for a nice run down into the 0-0 figure, which is where you wanted to take. Okay, so railroad track pin, this would have been my entry. Stop loss above the high of the day. This would have been about almost a 2-to-1, about a 1.5-to-1. And don't be greedy. 1.5-to-1s will work for you. As you gain momentum in your trading. Remember, 1.5-to-1 is a 3% gain on a 2% risk. So just understand that it's really a question of building bricks in this business. So I guess we could look at the last one from last week. It's EJ. This was on Friday. So let's go have a look at this one. And I wasn't able to find on these 4 examples an example of the TDI shark fin not working. So kind of sorry about that. Pardon me, but another type 2 London pattern, oftentimes you'll see them dealing with the Mayo. That's nice as well. And this thing shot lower pretty nicely. Did the trap through, but did the pullback to day open price and then kept running. So go back and study these. There are hundreds of them available for you. Okay, with the idea that you're putting in the higher time frames with the lower time frames, that is the ultimate objective that we are here for, is to merge the worlds of the D1 trends, the H1 market maker cycles, even the outside structures into the world of the London patterns and any other type of pattern. So that is the idea. I want to have a look at your questions when we go into the pre-market session. I'm going to go back into this section. I'll answer your questions in the pre-market session. But in terms of the DMR itself, we're here sitting solidly at 128. I'll wish those of you watching the video a fine evening. And big hugs to you all. And go buy yourself some hourglasses and train the chimp. Train the chimp. You can't run from the chimp. You can't medicate him away. You got to train the chimp, train the mind, and you'll be surprised at how much you can do for your trading and other things. So have a great night, and we will see you on Skype. Good night for now.